Hello everyone! In this video we are going to talk about a topic that is often misunderstood or overlooked, taxes. We all know we have to pay taxes, but do we really know how they work? In this video, we're going to take a deeper dive into taxes and how they affect our economy. What are taxes? Taxes are a way for the government to raise money to fund various public programs and services. Every time a person buys a product, earns money, or purchases property, the government collects a specific amount of taxes on that transaction. Taxes are used to fund services such as education, health, public safety, and other essential government services. There are different types of taxes, which apply to different areas of the economy. Income tax is one of the most common taxes, and is based on the income a person earns. Property tax applies to real estate, such as houses and land, while sales tax applies to the products and services a person purchases. Another common tax is the value-added tax, VAT, which is levied on the value added at each stage of the production and sale of a product or service. Taxes are important because they provide the government with the resources it needs to fund programs and services that are essential to the well-being of society. Without taxes, the government would not have the resources necessary to fund education, healthcare, and other public services. Taxes are also used to fund infrastructure such as roads, bridges, and public transportation services. Although taxes are necessary, they are often frowned upon by people who feel they are paying too much in taxes. In addition, some argue that taxes discourage work and investment, as people may feel that they are working for the government rather than for themselves. On the other hand, others argue that taxes are necessary to reduce economic inequality and provide essential public services for all citizens. There are different ways in which governments can use taxes to achieve specific objectives. Some governments use taxes to incentivize certain behaviors or discourage others. For example, some governments impose higher taxes on products such as tobacco and alcohol to discourage consumption. Other governments use taxes as a way to finance specific projects, such as building infrastructure or improving public services. Taxes are an essential way in which the government raises money to fund public programs and services. Although taxes are often frowned upon by many people, they are necessary to keep a society functioning properly. The different types of taxes and their application may vary in different countries, but all are intended to provide financial resources for the management and improvement of social welfare. Types of taxes. There are many types of taxes that apply to different areas of the economy. Below are some of the most common types of taxes. Income tax. Income tax is based on the income a person earns. Workers receive their salary after a percentage of taxes are deducted, which means that the government receives a portion of their income. People who earn more money generally pay more income tax than those who earn less. Sales tax. Sales tax is levied on the products and services a person buys. This tax is calculated as a percentage of the sales price and varies by country. Generally, sales tax is applied to goods and services that are consumed in the country where the transaction takes place. Value-added tax, VAT. VAT is a tax levied on the value added at each stage of the production and sale of a product or service. This tax is levied in many countries and is calculated as a percentage of the sales price. VAT is used to finance government programs and services. Property tax. Property tax is levied on real estate, such as houses and land. Property owners pay taxes on the value of their real estate. This tax is used to fund local public services, such as education and security. Inheritance tax. Inheritance tax applies to inheritances received after a person's death. The tax is applied to the amount of the inheritance and varies according to the country and the amount of the inheritance. Vehicle tax. Vehicle tax is levied on vehicle owners and is used to finance public transportation and road services. This tax varies by country and type of vehicle. Tax on luxury goods and services. Taxes on luxury goods and services are levied on products and services considered to be luxurious or high-end. Generally, these taxes are higher than taxes on ordinary goods and services. Corporate income tax. Corporate income tax is levied on businesses and is based on the income that the business generates. This tax is used to fund government programs and services. Each country has different types of taxes and different tax rates, which means that taxes may affect individuals and businesses differently. How are taxes calculated? The calculation of taxes depends on the type of tax being assessed and the jurisdiction in which it applies. For example, income taxes are calculated based on income, while sales taxes are calculated based on the value of products and services purchased. In addition, the calculation of taxes may vary depending on whether deductions, exemptions, and tax credits apply. One of the best-known taxes is income tax, which is levied on income earned by individuals and companies. The calculation of this tax is based on gross income, which includes income earned from work, investment, and other income. Most countries have a progressive tax system, which means that the higher the income, the higher the percentage of tax to be paid. On the other hand, sales tax is a tax levied on the value of products and services sold. This tax is calculated based on the sales value and varies by country and state or province. In some places, sales tax applies only to certain products or services, while in other places it applies to all products and services. It is important to note that some taxes allow certain deductions, exemptions, and tax credits. For example, in income tax, deductions allow certain expenses, such as mortgage interest and charitable donations, to be subtracted from gross income. Exemptions allow the amount of taxable income to be reduced, and tax credits directly reduce the amount of tax payable. In summary, the calculation of taxes varies depending on the type of tax and the jurisdiction in which it applies. Income taxes are based on income, while sales taxes are based on sales value. In addition, the tax calculation may include deductions, exemptions, and tax credits that may reduce the amount of tax payable. It is important to understand how taxes are calculated in order to better plan and manage personal and business finances. Why are taxes important? Taxes are a contribution that citizens and businesses make to the state to finance public expenditures. They are often seen as a financial burden on taxpayers, but in reality, taxes are an important part of the functioning of a modern society and have many benefits. First, taxes enable the government to finance projects and programs that benefit society as a whole, such as education, health, security, and infrastructure. Without taxes, the government would not have the resources necessary to provide these essential public services. In addition, taxes are used to redistribute wealth more equitably. Progressive tax systems, which charge a higher tax rate to those with higher incomes, help reduce income inequality and ensure that all citizens have access to basic services. Taxes are also used to fund social protection, such as social security systems and programs to help those in need. This helps ensure that those facing financial hardship can receive assistance and support, which in turn can help reduce poverty and improve people's quality of life. Another important benefit of taxes is that they help maintain a stable economic system. Taxes are used to finance the regulation and supervision of financial markets and to protect consumers from dishonest business practices. They are also used to stabilize the economy by implementing fiscal and monetary policies. Finally, taxes are essential to fund national defense and public safety. This includes funding the armed forces, police, and emergency services, which protect society from internal and external threats. In short, taxes are a mandatory contribution that citizens and businesses must make to the state to finance public expenditures. Although often considered a financial burden, taxes are essential to the functioning of a modern society. They make it possible to finance projects and programs that benefit society as a whole, reduce income inequality, provide social protection, maintain economic stability, and finance national defense and public safety. How can we reduce our taxes? There are different ways we can reduce our taxes, such as tax planning and tax deduction. Tax planning involves adjusting your finances to reduce your tax burden. Tax deduction is an expense that you can deduct from your taxes, such as medical expenses and mortgage interest. Conclusion: taxes are one way the government raises money to fund different public programs and services. There are different types of taxes, and they are calculated based on the income and property you own. Taxes are important because they fund the services and programs that the government provides to society. There are different ways we can reduce our taxes, such as tax planning and tax deduction. We hope this video has been helpful in better understanding how taxes work and how they affect our economy. Thank you for watching this video. I hope you found the information useful and entertaining. If you like this video, be sure to like it and subscribe to our channel so you don't miss out on future content. See you in the next video.